Hey everyone, thanks so much for tuning in. This is CryptoVatsik. I would really appreciate it before we get started if you hit that like button to support the channel. And if you really find this content helpful, don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and are my opinions only. Let's get right into it. Okay, today we're going to talk about an altcoin, MDex, that's made some pretty serious moves. And before we get to the chart, we're just going to quickly do some fundamental stuff. Just on CoinMarketCap here, MDex, it's ranked number 168 currently, market cap 115 million, fully diluted market cap 130 million, and then circulating supply 923 million of 1,060 million. So a good ratio there that you like to see between fully diluted market cap given the circulating supply. Being a lot of the total supply that could possibly be introduced into the market, therefore lowering the inflation, so to speak, towards it. One thing I really want to note is the volume, 160 million, up to 256% in the last 24 hours. Okay, this is really big. We're going to get into that on the chart. What is MDex doing? This is just an article also talking about the surge that it's recently had. Price surge 50%. It's a lot more than that now at this point as market slumps. Here's why. There are some positive developments in the MDex project. Recently, they announced the launch of the perpetual trading feature on their decentralized exchange through their Twitter. So the platform supports up to 200x, and they offer a kickback on the trading fees with MDex. The community finds the project interesting and different from others. Further, to celebrate the launch of the perpetual feature, they announced $10,000 airdrop event. So definitely some interesting things going on. Speculators are wondering if this is the reason for the pump. Is that really enough for volume to really spike 250% in the last 24 hours? I don't know. No one knows, but all we can do is look at the chart, and that's what we're going to do. All right, starting off with what we're seeing on the chart. This is MDex USDT on Binance. So we're on the 4-hour. We're just going to zoom right in here and see what we're seeing. So basically from an elliotwave standpoint, we have our first major impulse wave, major wave 2, 3, 4, and 5, okay? And this theory holds true because all the while we never broke wave 1 territory with our wave 4 retrace, okay? And so we have our face major wave impulse that retraced heavily to, I can just see it right off the bat, towards the 78.6 percentile, meaning that the third wave should retrace less. And we came right back down to the 382. So there you go, right? So clearly a 5-wave, potentially completed 5-wave structure at this point. I do expect there to be a retracement shortly from this. And if we take our our fib extension tool, what do we see? Okay, so from the bottom of the move, wave 1 down to the retrace of 2, just going within the candle bodies, we get our 1-to-1 extension right here. Clearly 1-to-1 actually deviated quite well above, and then our 5th wave typically going to that 1618 territory, which we have clearly tapped and actually deviated above, wicked above. So yeah, why am I considering this a first major impulse compared to all these? Like, why is this not a major wave impulse right over here, right? Well, really, it just boils down to the fact that we had not tested these previous lows. We had a very nice bounce, don't get me wrong, right? But we really ultimately didn't test the demand that was sitting down here, right? We hovered up above here for quite some time without hovering down here, right? And so we created this base at this level without really a retest of that demand area, okay? And so what I wanted to see was really a base form around that low. And so back here, what did we get? Well, we basically we had that low and we never really retested it, right? So we kind of hovered. It looked like we created this base, and bear markets are, classic to do this sort of thing where it looks like we've got a base, but we really haven't tested that low, that demand, to see if it will hold. And then ultimately when we do test it, we get some bearish consolidation potentially and make another new low and just keep doing that over and over. The difference being here, we had made our low, okay, clearly this was our low, with 1, 2, 3, 4 at least retests of that base, forming an area of consolidation, bullish consolidation, accumulation, whatever. But definitely demand is there, right? And that's established. So that is the difference between this bottom and these temporary bottoms. Now, another thing, I really don't love these wicks. I also don't love diagonals, but it's hard to refute. Got this, right? So we got this high and this high. And what did we get? Well, we got a bullish break well above confidence, bullish retest, and up. Okay, so you like to see that as well. Now we're looking for our confluence. Where's our confluence? So let's just go back into history. Let's look at some key points. There's clearly a low here that we had. Whoops. Am I still on elliotwave? Oh no, that's fine. Trend line. Previous low that we had, we've broken above. And same thing, lines right up with that diagonal, bullish retest above that level, break it above their level, and then bullish retest. Okay, so there's a little bit of confluence there at this point. I like to go back to those areas of the breakdown, right? So the origin of the breakdown, we made higher high, higher high, higher low, higher low, higher low. Where's the breakdown? Okay, we broke down right there. Okay, so lower low right here. And this is the origin of that breakdown. Let's go over and see where that's at. Okay, so clearly that was our area of resistance, right? So let's just, right here, right? Resistance, resistance, resistance. You can see on the dotted line here coming from that previous area that we have broken above. Okay, so that is another area. Origin of that breakdown. I like to look at origins of breakdowns. And then obviously we've also got the previous high, right, that we have now swept. That would be supply that has potentially turned into demand, right? And so let's look at that previous high. Where are we? Well, we broke above and now acting as support on this dotted line a little bit higher, okay? And so the other thing here is obviously this major range that we had, okay? So I really want to, let me just delete everything here for a sec, really want to stress the importance of ranges, and I don't like these wicks, so I'm going to take it from clearly these highs. So we've got 1, almost 2, and 3 here, right? And so we'll come down to the low. Let's take that over and see what we're seeing from that previous breakdown. Because I have a suspicion we are going to see a clean SR flip of this entire range. Okay, so deviation inside the range is resistance, breaks above. Top of the band of the range is now support, okay? Okay, so now let's go. If this is, with the assumption that this is our first impulse wave, right, of a major 5-wave structure. So we're saying that this 1, 2, 3, 4, 5 is the first major impulse of a larger 5-wave structure. Usually that first wave we're tracing more because of the bear market PTSD, right? So where are we looking now? Okay, so we got to zoom in on lower time frame, and we got to say this is our first wave impulse. We're going to take our fib extension tool. We're going to assume here that we are going to retrace at least to the 618, right? So that level here, 618. So we're taking our fib extension tool down to that level. Where's our 1-to-1 extension, right? We can expect our wave 3 to at least hit that 1-to-1 extension, or in that area. It could go higher based on the strength of this move. It could be slightly lower, but however, this is our range, so we're going to take it from here for now. If this first wave retraces to the 618, then we're assuming obviously the fourth wave not retracing as much, and then we're expecting our fifth wave to take us somewhere in the area of the 1618. And so let's just mark these out before we even look. Let's look at the 1-to-1 extension there, mark it out, and then let's look at the 618. 1618, okay? And now let's go over and see what we're seeing. So we obviously went through those key areas here that we had broken. We already went through that. And now we're just going to take these over, okay, to these key levels. What do we see? Well, there you go. We've got obviously a minor area of consolidation here that basically we bounced off of temporarily, had some minor relief, and then tried to hold it here, but then broke below, bearish retest and down. Okay, so an area that we could expect potentially to act as some form of resistance when we make our wave 3. Okay, and then the next major wave 5 here to complete this structure is basically potentially going to take us to this origin of this major breakdown where we had this level of this base level that we had as a bottom for quite some time, right? So from January all the way to April. Okay, so bottomed out, deviated, bottomed, take it with a grain of salt in this area, and then the origin of our breakdown here, right? So that is an area that we ultimately really want to flip, but I would expect to have heavy supply, people that were accumulating potentially in here thinking it's the bottom, and then it's not. Now they're underwater. Once the price gets back up to their break even, they're potentially going to have a sell off, and or people will be looking to short that area. Okay, so definitely an order block of sorts that you want to be aware of. And part of the reason why we see some of these short squeezes so powerful in crypto is because sometimes when we have these major drops, right, we just see some inefficiency in price. So really there's nothing in here for me to say that there's a clear reversal that's going to happen in here, either bottom or top, right? So this is kind of just inefficient. There's no real support or resistance to go from. You kind of just have to go to those key levels. So this would be more of a minor level. This would be really more of a major level that I'd be looking at. And so really you just start to see these kind of inefficiency areas in price where there's not much supply, and right, so demand can just kind of shoot up without heavy selling because people they're not the majority of people are not underwater there. The majority of people would be underwater from this level previously. Okay, so this could be short squeeze. It could be a short squeeze, and so if it is, ultimately I want to see this level hold, this previous range that I was talking about. Okay, I want to see that level hold because that is our retrace of this first wave down to our wave 2, and I want to see that, that area hold, right? So that is my key area at this point. Otherwise, if this is just a bear market short squeeze and we're headed lower, then we get our ABC down, something like that. And if we lose this level, then I would just expect that this accumulation range down here would just be prolonged, right? And so the bear market's not actually over potentially, and depends on what Bitcoin and Ethereum do in the market as a whole. But don't be surprised if we come back down. We've seen these short squeezes, and then we come right back down and continue to accumulate. And ultimately, we just want to see a continuation of the trend, a continuation of those market structure breaks, right? So what do we see on a lower time frame? If you're zooming in, trying to catch this trade, well, you're looking at those market structure breaks, right? So we're making lower highs, lower highs, lower highs. What did we do here? We have, okay, lower highs, lower highs, lower highs, lower high, a break of that lower high. Okay, so we made a higher high. However, we've just basically held this area, that key level here. That was our base, right? We were able to hold this level that was being retested. Okay, and ultimately we then made a higher high here. Okay, this is your key breakout level. We broke those highs, this range here within that base, broke that bullish retest. Yes, a nasty wick for sure, but this is your key to that trend reversal. And ultimately you're just looking at that now on a higher time frame. So now we zoom out to the daily. Let's see where that was, right? So we're making lower highs, lower highs, lower highs, lower highs. Whoa, market structure break right there. This candle, okay, that was your key on the daily. On a higher time frame, lower time frame, you'd get chopped up in all these wicks. In this wick, you'd get chopped up for sure, but you look at this, you make a higher high in comparison to this previous high, okay, and you have a hold of that level, market structure break, bullish retest. Okay, and that was your key signal. And then just keep zooming out, right? If you're long term, if you're not trading this intraday, you just keep zooming out, right? So we're just looking at those key levels, right? So we got this high to work with that we already pointed out. We had this previous base there, breakdown, right? So we've broken those. We are starting to break technicals here, where there is potentially a lot of inefficiency from this bear market. So anyways, you guys, thank you so much for joining. I really appreciate it. I want you to let me know if this video was helpful, and we'll see you on the next one. Cheers.